Hi, I'm Jack Gorman.
And I'm Gavin McLain, and we did our company analysis on Under Armour. First, I'd like to talk about some of the company's history. It was started in 1996 by Kevin Plank. Under Armour is a American clothing company as well as an accessory company. It was interesting fact about it. It was one of the first to create cold gear, which is actually today's version of Nike Dry Fit, so to speak. And its current headquarters is in Baltimore, Maryland.
Right now, the current price of Under Armour stock is around $74. They went public as a company in 2005. The 52-week high is $76.54, with the low of $45.04. This past year in 2014, it looks as though they did not pay a dividend. They had a stock split on April 15th of 2014, meaning the number of shares doubled while the price of the stock was cut in half. Looking at the income statement for Under Armour, they use a calendar end, and they have not yet released their earnings for 2014 as a total. So when we looked at the information, we were using 2013. The total revenue was around $2.3 billion, with their gross profit percentage in 2013 of 48.74, which is expected to increase to 49.32 in 2014. The net income was $162 million. Their earnings per share was 95 cents, meaning it'd take you 78 years to get your money back if you were to invest in them today, that being your PE ratio. Looking at their balance sheet, they had quite a bit of cash, which is good because every business needs cash. Their total cash was $347 million. Total assets were $1.578 billion. Total current liabilities were $427 million. The total stockholders' equity was about $1 billion, and then the total liabilities and stockholders' equity was $1.578 billion.
Now let's talk about the cash flow statement. The first is the operating activities. Operating activities is things like daily business transactions, which involve wages and possibly maintenance on your buildings, and it was around $120 million. The second is investing activities. Investing activities, it can involve your plant, property, and equipment, and theirs was, and Under Armour's was about $240 million. And finally, the finance activities is where basically you get your money from, for instance, borrowing money from a bank, and theirs was about $127 million, and their net change in cash is about $5.7 million. Their key company ratios, operating margin is about 11.37%. Their current ratio, which is current assets divided by current liabilities, is 2.65%. The return on assets is income divided by total assets times 100, which is about 11.87%. Their inventory ratio is about 3.03, and their net profit margin, which is net income divided by sales times 100, is about 6.96.
When we compared Under Armour to the industry, it looks as though they're doing pretty well. Some companies we compared to here are Adidas, Columbia, and Nike. Of these four companies, they are the second largest. We found that they had around 7,800 employees, which was a lot less than Adidas and Nike. One interesting thing to note here is their earnings per share was much lower than the other three, while still being quite a bit higher than the industry. That which in turn led to them having a high PE ratio, which was just something that we thought jumped out at us. When we looked at the future of Under Armour, we don't really know for sure where it's headed, but we had some guesses. The revenue trend is going up, which is always good to see. But that being said, their gross profit percentage has not been going up steadily like it should have been. Morningstar gave Under Armour a 1-star review. Many factors could include this high PE, the price of the stock, and then also the low earnings per share. So we think right now is not a good time to invest in Under Armour.